What's going on, everybody? It's Monday, September 19th, 2022, and I'm going to review over US 500. I believe it's episode 12 of the daily logs today. And today I have a picture of my entries from the AM session. If you go over to my Twitter, it'll be linked in the bio. You can see the analysis for that as well. I'll break it down today in the probably the 5-minute. But today I went long in the AM session. Overall, we were bullish. I talked about yesterday how I want to see price retrace back up into those relative equal highs. We still have not reached even close to them. So it's definitely something I'm looking at. We have FOMC on Wednesday. Tuesday, so tomorrow, typically is really choppy and really not a good environment the day before FOMC. So, and even Wednesday, the AM session of FOMC. So after today, I may just sit out until Thursday. I would suggest just keeping your risk really low and looking at high probability setups. I believe after Wednesday, we'll get some really nice price action into Thursday and Friday. So I'm content with today. Let's go into the daily chart. So I'm not sure yesterday if I talked about this on the daily time frame. The volume imbalance from the close of the week and then the close of Thursday. So I know I was targeting the volume imbalance when I was looking at the relative equal highs. So the main context of this trade coming into the AM session, we took out a previous day low, which is a really nice thing to see in a bullish environment. You want to see lows taken up before going higher. And then if you looked at US 100, it did not take out the previous day low. What did US 30 do? US 30 took out the previous day low. So what is that? It's a bullish SMT divergence. So it's tipping its hand to me that price was possibly wanting to go higher, but I was waiting for a confirmation. That's the thing with SMT, you can't just blindly use it because there's a crack in the correlation. You have to have a model and a narrative that's underlying that agrees with that SMT. So if we go down to a 4-hour, you can see here the sell side liquidity, I'm just going to do an X here, was taken out. So that's the previous day low. You go to a 1-hour chart, the sell side liquidity was taken out. So coming into New York session, I was looking at a potential I was looking at, these are my indicators, if you're wondering, for the opening of the day, and then the 7:30 open, that's mine. So it'd be 8:30 if you're following ICT's standard of time. But to me, I was coming in New York session, I think I talked about this before. I always look at the opening of the day and I think to myself, what did we do in London session? And is that creating the high of the day or the low of the day for this example? And are we ready to rally the other way? And all the things were aligning, right? We took out the previous day low. We had the bullish SMT. So all I was waiting for was that displacement higher. We took out the sell stops, waiting for the displacement higher, waiting for the fair value gap, waiting for price to be inside of a discount to go long. So all of those 3 other ones I needed to wait for in order to go long. So go ahead and break it down. Let me go back to the 1-hour. I think there isn't much to touch on here. We just took out the sell stops. Going down into the 5-minute. So if you look at this kill zone here, this is the 8:30 open. To me, there's nothing in here for me to really want to go long. There wasn't a nice displacement. I mean, this could have been your shift in market structure here. There's a fair value gap here. I don't really like any of these down closed candles. So that's the reason why I waited for price to do displace higher. The old me, once I saw this move, I'd be wanting to jump in. I'd be on a 1-minute chart trying to find any retracement, but I just kept calm. And I've seen this so many times. I wanted to see price come back into this fair value gap. Now, I meant to touch on something. I'm sorry. This whole thing, if you look at it and you study market maker seller buy models, I know I haven't talked about this a lot because I don't think it's incredibly necessary, but this is a pretty clean market maker buy model. So you have the original consolidation, reaccumulation, or accumulation, reaccumulation. We have our smart money reversal, and then we distribute back above the original consolidation, which is the buy stops, and then the volume imbalance, which we traded back into. So we had relative equal highs resting here, all above these highs there. And what you want to see with market maker buy models, I'm going to let you in on a little secret. You want to see on the, for an example, with the market maker buy model, you want to see buying where there was old selling. So if you look on the left side of the curve, you're going to see here old selling was here. You could use those two down close candles. The reason I'm using these two here is just because that aligns, and I think if I went up to a 15-minute, there's a fair value gap that aligns with it. Yeah, there's a fair value gap here. So what I'm getting at is you want to see where the first stage of accumulation, you want to see the first stage of just distribution. So that's how I look at it. It should mirror each other. So if you look at the left side, it should look pretty similar to the right side of the curve when you're in a market maker buy model, and then vice versa for a market maker sell model. But the YouTube model simplifies things. If you don't even want to study market maker buy models or sell models, you can wait for this pattern and understand the underlying narrative, which is what I really do. I understand market maker buy models and sell models pretty well. I just don't use them as much as I would really, I guess, like to, but I think the YouTube model helps you just simplify everything, and it finds that pattern for you regardless if you see the market maker buy model or sell model. So with that being said, let's review what happened in the AM session. So we had a market structure shift above this high here. If you look at my post on Twitter, it's a very similar markup. So we had the sell stops ran on the 1 hour time frame. I mean, even here, you can see it. We had the bullish SMT with US 100, price displaced higher. And then if you look at the 2-minute or the 3-minute, or even the 1-minute, let's go down to the 1-minute here. So if you look at this is the 5-minute for value gap I had highlighted. If you do from swing low to the swing high here, price dipped underneath the equilibrium. So we're inside of a discount. So that's what qualifies the trade for me. Even if we wanted to do this low here, that's what qualifies a trade for me. The fair value gap has to be in a discount or a premium. I've got caught up so many times in this model looking for a fair value gap that wasn't inside of a premium or a discount, and I can't tell you how many times I've lost on a trade because of that. So then I was going ahead and targeting the volume imbalance. That was a draw on liquidity for me because we had the buy side liquidity resting here, so we had the relative equal highs, and then the volume imbalance, I thought we were going to go through it, but it was just a overall target for me, plus the Fibonacci extension. And I believe overall, so my entry was here, and I was risking just about 10 points, and I was targeting this. So about 26 points, and that's a great RR for me. I was taking partials along the way. So if you look at the 2-minute time frame or the 1-minute, I was looking at this buy side liquidity. I took a partial here. I actually took 2 partials. I believe that was up around 14 points, somewhere around there. Yeah, 14, 15 points. So that was okay with me. And I actually moved my stop loss to break even pretty quickly. But luckily, I was able to stay in the trade. I took around 50% off here. Price retraced back in. I think my stop loss at break even was right here. So that was a bit of luck there. And we eventually extended into the volume bounce and I fully took off there. And then price decided to displace lower. And if you look at ICT's Twitter, he discussed today what happened in the PM session, how you could have capitalized on it overall. I'll touch on it a little bit. To really make sense of that, the PM session, suggests you looking at the 1 hour. So we had a fair value gap here on the 1 hour. So that's your parent PD array. Price displaced higher. So if you were probably on the 15-minute or 30-minute, you get a little bit more clear picture. But from the dealing range, we were diving into a discount relative to the dealing range, fair value gap inside of the discount. And then if you look at the 30-minute, we're coming into that fair value gap. Even here, NASDAQ hit its order block, which is really nice to see. The 15-minute coming back into that fair value gap. Let me get rid of this. And then if you look at the 5-minute, how I've talked about a lot of times, you want to see lows taken out before going higher. You want to see highs taken out before going lower. And this is just a classic ICT where you see the AM lows or highs being taken out before the PM rally that continues the overall trend or narrative. So you can see here, price displaced higher from the swing low here to here. You're inside of a discount. So either A, you could have went long when we dipped into that fair value gap in the 1 hour, 30-minute, 15, or even the 5-minute. And then you could have went long here. Let me see if the 2-minute, I haven't really reviewed this too much. To be honest with you, I would have only really liked to go long down here. Anything in here, it's okay. We have these two down close candles here are your order block. We have an order block here. So price dipped into that. If you do swing low to swing high here, you're inside of a discount. So you can get really fractal with the fib and dealing ranges if you would like. If that confuses you too much, just stick to higher time frames in the overall dealing range. I think that's going to be it for today. Let's go over what I see for tomorrow. So I really like that we displaced above the volume imbalance, especially after filling it in. If you see, this is basically a reclaimed PD array, so a reclaimed volume imbalance. After you see price go into a PD array like twice like this, don't expect a third time, a third bounce out of that. Expect it to run that liquidity above it or below it. Let me actually move these. Actually, I'll keep them on for the sake. So we do have a fair value gap from this low to this high, and then coupled with the volume imbalance. So we can use that as possible support to go higher into the buy side liquidity, which is resting here, which is the overall target. And then if you want to do let's go down to a 30-minute here, depending if that's the high that's set in place, but inside of a discount. So that'd be really nice to see. If you look at the 30-minute here, if you ignore the volume imbalance, we have a fair value gap from here to here. So this is something I would pay attention to tomorrow, depending on the price action. I may trade if the opportunity presents itself, but I'm going to keep risk really low due to FOMC the following day. And then overall, I really want to see the buy side liquidity be taken out. It would be nice to see that taken out before FOMC, but we'll see what happens with the news. 4 hour, there isn't much information here for me besides the volume imbalance. Like I said, I want to see it be traded back into the daily time frame. I would like to see a low take place, and then we rally higher into the fair value gap here. I think the bullish SMT on the daily or even the 4 hour between the two other indexes really suggests to me that we can be bullish for a short while here. As long as I'm bullish until we take out this fair value gap. If we trade beneath the fair value gap, then obviously we're gonna have to change gears. But that's it for me tonight. I will talk to you guys tomorrow. Good luck and good trading.